Blast off, everybody. How's everyone doing? Gil gave me the countdown, the final countdown. Remember that tune? Well, I have a lot to talk about in gold and euro. In fact, there's a couple of potential head and shoulders bottom formations developing there that could set up. I do want to start off with Bitcoin because yesterday I was talking about, you never go broke taking profits. And if you're fortunate enough to ride this whole wave up here, that you should be taking profits and look to buy a break. Then we got the news about El Salvador becoming the first nation to use it as their national currency, to use Bitcoin. And I don't know if that was the reason for the sell-off, but we were about 78% back from the old high here. And why can't we pull back 78.6? So it looks like Bitcoin, if you're a fib trader, don't forget 78.6. I know a lot of people use 61.8. What I like about 78.6 is it shakes out all the 50% and 61.8 retrace traders. Okay. So, once it starts getting this deep, I don't do much with the 88, although I've seen it work in the S&Ps, which is something else I want to talk about. So far, they've contained the damage, although it's big in price, 10%. I maybe heeded my call yesterday, got out. I think we were at 50,000 yesterday before we dropped to 43. But should we start taking out this 43 just arithmetically, you're talking about another grand under here. So that could be 33. And what a coinkydink. It's 78.6 there. I would take a stab at it down there. Let the 50%, because we already did 38% of this whole move in one candle. So look, anything could happen. Maybe that was the best buying opportunity of the century, but that's not the kind of action I buy. But in raging bull markets, you just buy anything, you always get bailed out by the trend. Okay, so I think what may have happened, and I think the Sandinistas, if you remember them from the 80s, came in and switched Bitcoin. I believe every citizen was going to get $30 worth of Bitcoin, and they ended up giving them Dogecoin. So that took up a lot of the bidding in Bitcoin. I'm just kidding. I know it's not April Fool's, but this world gets pretty wild to me. Anyway, this is an important level here, guys. It's your 200-day, and you have both of these converging. Wouldn't it be something with all the euphoria in Bitcoin that we end up with some type of death cross in the coming weeks and months as both the 50 and 200 are beginning to converge? So we'll see. Maybe it'll end up being a golden cross. So we'll take a look at and monitor that as we move forward. I do want to talk about the euro, which it's selling off a little bit. I know a lot of people probably like this 118 level, and I have my eyes set on the 1750 pivot again. It's worked for me on both sides of it, and it is possible that we could pull back towards 1750, closes back under it, portend new lows. But just like I said in Bitcoin, I'd give it a shot on that retrace. Almost looks like we're developing, this could be a left shoulder, and here's your head. And then we rallied right back to these levels, so we could give it a neckline here, right? Just do a trend line. I can do it by hand. So going to have this type of formation working here. All right. And that's going to, a breakout of this is going to measure 2040 because, the low was 1670, to 119. They're actually going to move, measure up towards 121. So it's interesting. That would really be pretty negative action, because when I was talking about longs here off this wedge, I was figuring 1960 to 20 before the dollar would start to rally again. Now, when I look at this chart, I could throw just, not always pay attention to a narrative, but price. So anyway, this looks like it's going to be a critical area in the euro. And what's interesting is, we had the yields, which, generated this dollar bounce, which was more pronounced in cable than in euro, not as much today. But when we're looking at this, perhaps we get a right shoulder. And the point I was going to make was what really took it on the chin the hardest yesterday with yields going up was gold, in my opinion. Okay, gold had a pretty negative day back to the bottom of the range here. Okay, and if you recall, I said, I wasn't going to chase the gold up here. I think that we'll still get a pullback. There'll be opportunities between 1760 and 1740. And so, once in a while in the markets, one type of formation begins to dominate. At times it could be wedges, at times it could be ranges. But here is the potential for another head and shoulders. This could be interpreted as a left shoulder coming in at 1750, right? With your neckline being at the resistance level, we tried to penetrate but couldn't. The only thing that kept me out of the trade was we had a confirmed high up here and we were doing this. I thought we'd get another high, so I missed it. And this really isn't great recovery action here either. So gold took the pop in the yen and the pop in yields pretty seriously. So, it does look like it's viable for us to see this level. So we might have a couple of head and shoulders formations to monitor and possibly enter long positions if we're a believer that gold is eventually going to break out over this level, which is going to take you up towards 1980. I believe it's about $150 move. So it's going to take out these highs, head towards the old highs possibly. That's a measurement if this is a B or a 2 before we get a 3. Under 1678, if you're buying this break, you can't be long under here because, then you're talking 1500 gold, right? So I think we're at some critical junctures in that market. I have to say that the S&P's reaction yesterday was really kind of weak. We're still diverging here. We're right at the 2-week off numbers. So you guys may want to, let me teach you something that's a very simple technique, and it's how you determine a reversal in the market by using 2 weeks. You count back 2 weeks to where the market closed. That's a memory of about 10 trading days. So when you go the weekly of the S&Ps and you count this week and then you count back 2, on this candle, the close was 45.11.30. So if by Friday we're closing back under this 45.11.30, that's a 2-week reversal, and you just take that close and you risk the high of the week and see if you could get some type of, be there for some type of correction. I think that we held some, short-term important level, this 4,500, 43.5 is going to be big. And you're really starting to threaten break wedge lines, if I just do a wedge here. Let's take it from here. Okay, so you have a grinding, advance, diverging, and a wedge line's not that far away. 2-3 hits here. So let's call it right there at 44.40. Get rid of this. Oh. Okay. Okay. So it's going to come in right around 44.40, and taking out this low now, I think would seal it at 43.5. So we'll see if we're going to try and generate another push to new highs. And, you know, that's possible, but I think you always have to be alert here that this type of advance, just one candle can change the whole trend that's been going on for over a year. So be careful with that. Taking a look at Nasdaq, it still, you know, was holding up better, but even the Nasdaq has a chance for a weekly reversal. It would take 15,432, so we're about 190 points away in the Nasdaq. But look at the daily. We could have a 2-day reversal today with closes under 15,703. That looks like that's possible. And, you know, we're having a throw over to the throw over. So this was your first throw over, and we never got back inside of it. Then we started wedging again, and we've had another throw over. Look at that. So getting back under 15.3 would negate this throw over. And, you know, if you see 14.5, 14.4 in the NASDAQ, it's say it closing back under this wedge line. And really, this has been the relative strength in the market, the tech. All right, you know, airlines have been getting hit. So transports haven't been doing well. The reopening trade because of Delta was the short. But, you know, we could rotate again. Let's take a look at a couple of the leaders. I noticed that Apple, it actually went to the top of the line and it's reversing right now. So we had a new high up here, confirmed on the 4-hour. I don't believe it did on the daily. Look at the glaring divergence on the daily. So I'd be careful with Apple up here, this top of the wedge. Could we accelerate and keep going? Maybe, but this is pretty glaring. It's a rising wedge. Back under these highs is going to be your first warning sign, probably before that, but definitely back under this flat line. And keep in mind that Apple is or does have the largest market cap, right? So, you know, let's just move this one. Let's move it up here. This is a very important stock to follow with what's going on with Nasdaq now. So let's see what it looks like here. Yeah, 150-ish. And there's convergence there with the upper wedge line. You really don't want to know what where I anchored the wedge line, because you'd probably send me to think I needed to maybe go take a rest in a sanitarium or something, and I need one. Anyway, so here's the big picture. Okay, so, you know, we start getting negative signal short term under 151, then the wedge line comes in, then the 50-week at 130. But, you know, to me, it looks like we could trade $80, you know, back towards a pre-COVID crash high. So I one of my contemporaries called me crazy when I broke that analysis down. Well, let's see what Amazon's doing. You know, Amazon keeps trying to rally into the gap it left. Here we are again, you know, rallied into the gap, haven't filled the gap. Let's see if it does. I don't think it will. Tesla, just grinding, continues to grind. I don't think it's made a new high in a long time. Here's Microsoft, you know, kind of rounding out a top here in Microsoft, diverging. Weekly looks pretty good. 4-hour, never really made a new high. This maybe it's just this was a failing rally and then back under 295. I don't know if we had the kind of bear move I thought might occur. You almost think like you could see 250 Microsoft, you know, and that's not even close to its pre-COVID highs. Pre-COVID highs is under 200. It's 190. So I don't know if I'd look for that much, but here's the number again: 240, 250. Microsoft. Google's been performing okay. It shows a lot of relative strength. Starting to diverge here on shorter term TFs, I think it is. Yeah, well, yeah. So Google still has, you know, some positive momentum. Maybe it's going to try for a new high. And Netflix, I think, has been on fire. Yeah. Netflix, I don't think I'd short it. So we are starting to get, maybe this is second drive right here. And here's Facebook. So Facebook, the RSI structure isn't that great in Facebook compared to the others. Look at the daily has not confirmed since May. Okay, so I know we're making new highs here, but there is some inherent weakness in the RSI structure anyway. And also we're getting the sell-off into the harvest on the grains and beans. So, I mean, this measures $10. I don't think we'll get down there, but kind of looking to buy a harvest low. That's what a seasonal trade, maybe sometime next month into the harvest. Buy grains. Wheat seems to be the champ. Corn even weaker than beans. So your relative strength leader is wheat. Maybe wheat probably doesn't make a new low, so maybe 660 is it for a nice entry. Gold shares under pressure, you know, tells me I don't, you know, the gold shares, I'd like to see the gold shares start acting better than the metal, and they're not. See, gold's way off that spike low. Looks like we could, you know, head down towards under 30 in the GDX. And here's a junior that I keep an eye on. I kind of like this level down the road, see what happens in Yamana around 350. I have a great interview tomorrow. I'm going to talk about it because let's face it, the NFP was a miss, a big miss. And how do you explain it? This whole employment picture is very confusing. You know, a lot of the government support programs are ending, and there's, you know, all this talk about labor shortage, and there's still 10 million unemployed. Where's the disconnect? What's really going on here? And I'm going to have a great guest who used to be on the BOE, and he's a labor economist. So I'm going to have him try and make sense of what's happening in the U.S. employment picture, and looking forward to speaking to him. And no, it's not a secret. It's Danny Blanchflower. So here he is. Okay, so Danny used to be on the BOE, was a voting member, played an important role in when we were in a recession and the 08 level of wanting to aggressively cut rates. So Danny will be with us tomorrow. So if you want to know what's going on, if you're kind of an economist and that's your interest, stop by. You could type your question in during the live interview, which will be the same time as my live stream at this time. So I'll see you tomorrow for Danny Blanchflower, and maybe that was just an aberration. And I'm also going to ask him to put his central banker hat on too. And I know that he probably, like Paul, is in favor of not being in a hurry to taper. So tune in for that. I welcome all of you that are watching me live on YouTube. Just type in, hit the like button if I'm adding value to what you're trying to accomplish as a trader, and some of the comments and scenarios have helped you out. Also, come in and say hello at www.tradegatehub.com. Registration's simple, it's free. I'm sure there's times you'd like to ask me a question during my commentary. You could do that. You could just type it in, come into the platform, because I don't monitor the YouTube stream. I'm looking at the charts so I could provide some creative and different views than what you hear from most people. So be careful out there. It's September, and I think that the volume should be coming back to the market. And there's going to be a time people are going to think, because there might be higher taxes, especially capital gains, although it's not going to happen this year, that this year still could be a better year to take it than waiting to see what happens in next year, with two possible scenarios. First of all, taking it at these levels, or taking it because you're uncomfortable with the levels the markets are trading at. So at the minimum, buy insurance. We all buy insurance for our homes to protect against fire, not because we're hoping we have a fire, but you're protected if one of these pots that are bubbling on top of the oven start to spill over. So that's going to be a wrap for me. Any questions before I go? Just a recap. Thinking the euro has a chance to maybe trade down towards this 1750 level. That I don't see any reason to be in a hurry. You never could rule out that this was the whole rally. I think there might be one more, but closes back under 1750 are going to look pretty ugly. So always reassessing. The end's up, but it's no trip to Hollywood. It had a good day here. It really needs to get going and yields to hold for the end to achieve this third drive up towards 112. So like every day, don't just count your currency and crypto and silver coins and your oil rigs. Count your blessings, and good hunting the rest of the day. And our mission statement to wrap it is to build up and edify traders every day. Adios, everyone. Good hunting.